The United States, a land of vast diversity, also boasts a complex and varied tax system. Unlike many countries with a uniform national tax structure, the USA employs a multi-layered system, with federal, state, and sometimes local taxes playing a role. This video explores income, sales, and property taxes in the USA, comparing them to other developed nations. The USA operates a progressive income tax system, meaning tax rates increase with income levels. The federal government imposes income taxes ranging from 11% to 40% depending on income brackets. This places the USA in the middle ground compared to developed nations. Countries like Denmark and Finland have much higher top marginal rates, over 42%, aiming for greater income equality. Conversely, Switzerland and some Gulf states have minimal or no income tax. Unlike income tax, the USA lacks a national sales tax. Instead, individual states levy their own sales tax rates, often supplemented by local taxes. This results in significant variations across the country. States like Alaska and Oregon have no sales tax, while states like Louisiana and Tennessee have combined rates exceeding 11%. Property taxes in the USA are levied locally by municipalities and counties. Rates vary significantly based on location and property value. High-cost coastal areas often have higher property taxes than rural regions, compared to other developed nations. The USA relies more heavily on property taxes to fund local services. Countries like Australia and New Zealand also have high property taxes, while some European nations rely more on national taxes to fund local governments. Exploring the top 10 states with the heaviest tax burdens. 10. Iowa. Iowa utilizes a progressive income tax system, with 9 brackets ranging from 0.33% for the lowest earners to 8.53% for the highest earners, exceeding $160,851 for single filers in 2024. This system ensures a fairer distribution of the tax burden, with lower earners paying a smaller percentage of their income. Compared to neighboring states, Iowa's top marginal rate sits slightly above Minnesota 8.55% and Illinois 4.95%, but below Nebraska 6.84% and Missouri 5.3%. This positioning makes Iowa attractive to those seeking a balance between lower income taxes and access to essential government services. Unlike income tax, Iowa's sales tax is a flat rate of 6%. This simplicity benefits businesses by streamlining tax collection and reduces confusion for consumers. However, compared to some neighboring states, Iowa's sales tax is higher. For example, Minnesota boasts a 6.875% rate, while Oregon has no sales tax at all. This can impact residents who rely heavily on sales tax-based goods, particularly in border communities where residents might shop in neighboring states with lower rates. Property taxes in Iowa are levied locally, meaning rates vary significantly depending on the county and municipality. While the state sets a rollback rate, the actual property tax rate is determined by local governments to fund schools, roads, and other essential services. This localized system allows communities to tailor tax rates to their specific needs. However, it can also lead to disparities, with some areas experiencing higher property tax burdens than others. When considering the combined impact of income, sales, and property taxes, Iowa falls within the middle range nationally. The Tax Foundation estimates Iowa's overall tax burden to be around 9.15%, slightly lower than the national average of 9.74%. This relative affordability positions Iowa as an attractive option for businesses and individuals seeking a balanced tax environment. 9. Illinois. Illinois falls into the upper tier of income tax states, with a progressive structure ranging from 4.95% for the lowest bracket to 4.99% for the highest earners, above $250,000. Compared to its neighbors, this rate is significantly higher. Indiana has a flat 3.23% income tax, while Wisconsin has a progressive structure with a top rate of 7.65%, but a much higher threshold for reaching it. This places Illinois at a disadvantage in attracting high-income earners. and businesses who may be drawn to states with lower tax burdens. Illinois has a combined state and local sales tax rate that varies depending on location. The average statewide rate sits at 8.84%, placing it above the national average of 5.9%. However, some counties and municipalities add additional sales taxes, pushing the effective rate even higher in certain areas. This puts a strain on Illinois residents, particularly those on fixed incomes, as essential goods like groceries and clothing become more expensive, compared to border states like Missouri 5.63% average sales tax and Kentucky 6% flat sales tax. Illinois residents face a significant disadvantage in terms of purchasing power. Illinois is notorious for its high property taxes. The statewide average effective rate sits at 1.73%, significantly higher than the national average of 1.07%. This burden falls heavily on homeowners, impacting their disposable income and potentially hindering mobility within the state. While some states, like California, 0.73% average effective rate, have lower property taxes, others like Texas' 1.81% average effective rate are comparable to Illinois. This suggests that high property taxes are not a regional issue, but a specific challenge Illinois faces. 8. Massachusetts boasts a progressive income tax system, meaning higher earners pay a higher percentage of their income. The top marginal rate sits at 5.1%, impacting individuals with taxable income exceeding $100,000. This rate places Massachusetts amongst the top 10 states for income tax burden, significantly higher than the national average of 4.59%. Looking at neighbors, New Hampshire stands out with a 0% income tax, making it a particularly attractive option for high earners seeking lower tax liabilities. Vermont and Maine, while having progressive income taxes, have lower top marginal rates than Massachusetts. Massachusetts has a 6.25% state sales tax, which is fairly standard compared to the national average of 5.9%. However, many cities and counties in Massachusetts add their own local sales taxes, pushing the total rate even higher. Boston, for instance, has a combined sales tax rate of 6.25%, plus 2.7% local, equals 9%, making it one of the highest sales tax rates in the country. Compared to neighboring states, New Hampshire has no sales tax, while Maine and Rhode Island have lower combined rates than Massachusetts. Property taxes in Massachusetts are levied by local municipalities, and vary greatly depending on location and property value. Nationally, the average effective property tax rate is 1.07%, while there's no single average for Massachusetts. Some communities have rates exceeding 2%, significantly higher than the national benchmark. However, compared to some neighboring states like Connecticut and New Jersey, with notoriously high property taxes, Massachusetts might offer some relief for homeowners. Massachusetts' tax structure presents a mixed bag. While the income tax burden is considerable, particularly for high earners, the sales tax falls within the national average. Property taxes offer some variation depending on location, but can be high in certain areas. 7. Maryland. Maryland, known for its stunning Chesapeake Bay and rich history, boasts a vibrant economy and a diverse population. However, navigating the state's tax system can be a complex endeavor. This essay will delve into Maryland's income, sales, and property taxes, comparing them to other states, and exploring the implications for residents. Maryland utilizes a progressive income tax system, meaning tax rates increase as income levels rise. The highest marginal rate sits at 5.75%, applied to taxable income exceeding $100,000 for single filers, and $150,000 for married couples filing jointly. Compared to neighboring states like Virginia and Pennsylvania, which have no state income tax, Maryland residents at higher income brackets pay a significant portion. However, states with no income tax often rely heavily on sales taxes, potentially impacting low and middle income earners, who spend a larger portion of their income on everyday necessities. Maryland's statewide sales tax rate is 6%, a rate considered average compared to the national average of 5.9%. However, unlike some states, Maryland allows counties and municipalities to add additional local sales taxes, pushing the effective tax rate higher in certain areas. This patchwork system can be confusing for residents, and can disproportionately affect those living in areas with higher local sales tax rates. Property taxes in Maryland are levied by local jurisdictions, leading to significant variations across the state. Rates are determined by the assessed value of a property, and the local tax rate set by the county or municipality. Compared to national averages, Maryland falls slightly below, with an average effective property tax rate of 1.07%. This can offer some relief to residents, particularly homeowners, compared to states with higher property taxes. Maryland's tax system represents a balancing act. The progressive income tax ensures some redistribution of wealth, while the relatively low sales tax provides some benefit for lower-income residents. However, the lack of a standard sales tax rate across the state creates confusion and potential inequities. 6. Maine. Maine, known for its rugged coastline and vibrant lobster industry, also boasts a unique tax structure compared to other states. Maine operates a graduated income tax system, meaning tax rates increase as income levels rise. The top marginal rate sits at 8.5%, applied to taxable income exceeding $51,400 for single filers, as of 2024. This falls below the national average of 13.38% according to the Tax Foundation. Compared to its New England neighbors, Maine's top marginal rate is lower than Massachusetts, but higher than New Hampshire, which has no income tax. Maine's statewide sales tax rate is 5.5%, which is in line with the national average of 5.97%. However, unlike many states, Maine allows localities to add additional sales taxes. This can lead to varying rates depending on the specific county or municipality. For instance, some areas have a combined sales tax exceeding 6%. Property taxes in Maine are levied by municipalities, and can vary significantly depending on location and property value. The average effective property tax rate in Maine is 1.14%, which is slightly lower than the national average of 1.21%. However, this average doesn't capture the substantial discrepancies within the state. Coastal communities and major cities typically have higher property tax rates compared to rural areas. While Maine's income tax rates are relatively low, the ability for localities to add sales taxes can create pockets with higher overall tax burdens. Property taxes also vary greatly depending on location. Compared to neighboring states, Maine offers a more attractive income tax rate for high earners, but may not be the most sales tax-friendly option due to potential local add-ons. Maine's tax structure appeals to those seeking a lower income tax burden, particularly high earners. However, potential variations in sales and property taxes depending on location require further investigation. For individuals considering relocating to Maine, a closer look at specific municipalities is crucial to understand the true tax impact. We've reached the end of today's video. Thanks for watching part 1 of our series. We'll be exploring the rest of this topic in the next video, which will be published soon. Wishing you peace and prosperity.